Three, two, one.
Hello, everybody, and welcome to the DASTrader Newsroom. This is the last quarter of the year. Let's take a look at some stocks to watch as the market volatility continues. My name is Michael DeJoy. I'm Director of Education here at DASTrader. I'm also a licensed professional, and I'm joined by my co-host, Jill Malandrino, Global Markets Reporter at NASDAQ. Jill, how are you?
Good, doing well. Good to see you guys, as always.
Great to be here. All right, let's jump right into the news because I think we hit it spot on 2 weeks ago when we were talking about the news cycle starting to pick up the possible federal government shutdown and, of course, the increase in the debt ceiling that was required, as well as just passing the infrastructure bill. The big question of the day, and really the big question of next week, will political uncertainty lead to financial market uncertainty and potentially even a market correction? I'm really interested to hear your thoughts on this, Jill, because it's really, the market has been a bit of a roller coaster, since the last Fed meeting.
Right. And Mike, we spoke about this just a couple of weeks ago, that we have not seen a substantial move in the market, not even 5%, in historical amount of time. And it seems as if traders are looking to find a specific event that they can identify, like interest rates in December 2018, the debt ceiling in 2011, the pandemic lockdowns, are the very specific events you can hinge your hat on. And perhaps Evergrande could have been one of those events, but the market went ahead and digested that quite well, as we've seen on the tape. September is historically a volatile month. October certainly is. Curious to see what kind of fireworks we'll see here, because, of course, talking about the debt ceiling and Evergrande is still playing out. I also think that one of the larger issues is supply chain, Mike. Yeah. I think that's really what the issue is. I've spoken to retailers, I've spoken to strategists that have been on my show, and that really is the concern. We saw on CNBC this morning with an Amazon executive talking about how they were managing it, where lower price items, they've been preparing for this, but higher price items, look, I'm moved to my house in April, I'm still waiting for furniture, and we think it might come in October. So 6 months for something that could have taken 6 to 8 weeks, whether it's related to the COVID supply chain issues. But I think even more importantly, Mike, is what's happening with the labor situation and how this is translating into shortages and contributing to inflation, which I believe we'll get to later. But there's a confluence of factors going on, and the fact that the market continues to digest the news relatively well is interesting to me. But I think we could see some fireworks here.
Yeah, it's certainly, I think the analogy of a roller coaster, at least for the last 2 weeks, was exactly it, because we had the Fed announcement, and at first we went up, then the next day we slid down, and there was some really drastic movement in the bond market as well. There was some a steep increase in I think the 10-year, but needless to say, also an incredible strengthening of the U.S. dollar. The U.S. dollar hitting almost an 18-month high. So a lot of things that are just kind of overlapping on each other. And like you said, the market hasn't had a correction in a long while. Now, historically, two major market corrections or market sell-offs occurred in October. It was the 1987 market correction. In 1987, I think it was called Black Monday. And of course, it was the big one, which was the Great Depression sell-off, happened in October. The end of September was the financial crisis. It was like the end of September, when the U.S. markets melted down quite a bit after the failing of Lehman Brothers. So that was an end of September one. So yes, these are two historically volatile months, and we'll see how things, kind of play out. On a different note, we also have the continued concerns over the coronavirus, and I just, this was really what kind of, gave the market a little bit of support today. Was that Merck, which is a Dow Jones Industrial Average component. Merck was up quite a bit today on their new coronavirus treatment pill. And the question I had for you is, I know you're a little bit of a COVID-19 expert. The question I had was maybe Merck's coronavirus treatment pill is a better way to address the COVID-19 vaccine hesitancy problem. And I mean, certainly there's a big market for this, as we see that we still have cases occurring all over the place. So what are your thoughts on this?
Yeah, certainly would call myself an expert, not even close. And shout out to the medical community who truly are the experts here. Mike, I asked the same question that you did, though. If people were hesitant to get the vaccine, would they be hesitant to treat themselves? And my inclination is probably not, because a lot of people don't always get the flu vaccine, but they will get Tamiflu if they get sick. I think treatment is a little bit easier of a pill to swallow. I know it's a really cheesy pun, than it is to accept the vaccination. And, you know, it's almost, I think, just our understanding of how vaccines work and how viruses work. You technically don't have to get the flu vaccine. And if you get sick, you take Tamiflu, hopefully you recover. It's almost the same premise from what I understand with the COVID vaccination. You don't want to end up in hospital or intubated from the flu or from coronavirus. But the fact that they actually have a treatment that has been tested, and it's not like ivermectin or Lysol or anything like that, ingesting that. So the fact that there is a treatment that has gone through scientific standards is, I think, is very encouraging. And I think, you know, regardless of your view on vaccination, the fact that we were able to get one to market in under a year with the technology that's available is just really quite remarkable. So hopefully we'll have a better response to this treatment than we did to vaccinations.
I mean, my opinion is that anything that was actually created for the virus itself is better than a worm. I guess it's an anti-worm. Isn't that what they say?
For horses. But the whole thing is, if you are, and I'm sure everyone on this call has had this argument, if you are unsure about vaccination, if it's safe or not, why would you take something unless there's a study out there that I'm unaware of where ivermectin or some of these other treatments have not gone through the FDA process to prove on humans? You know, it's kind of counterintuitive there. And again, I'm not a medical expert. Perhaps there's a study that I missed, but from my understanding, I think I'd rather take something that has gone through the process.
Well, I remember when I had COVID and they gave me some medicine that I had never heard of that was actually approved for some other problem.
Mm-hmm.
And I mean, you know, fortunately for me, I was already well on my way to recovery. But I mean, you know, it's good to have actual treatments for the virus itself, treatments for the disease itself, as opposed to repurposing other things. And I don't think that people would have any hesitancy. When you're sick, your hesitancy disappears immediately, right? I mean, you say, okay, give me whatever it is to get me better. So I do think that this Merck, you know, this new pill by Merck, if it is, you know, if it is granted emergency use approval, I think it's going to be a real powerful tool to battle COVID-19, because I
certainly hope so, Mike. And even from a social perspective, if knowing that we have a treatment that's effective and we can hopefully stop with the mask mandates and allow people to freely commute and commune together, and hopefully this will break down some of the barriers of the decisiveness that we're experiencing right now, and we can kind of get back to
normalcy.
I mean, things weren't perfect clearly before the pandemic, but it just feels like everyone is so on edge and, you know, just tired of being pitted against each other. So hopefully, you know, we don't fight about flu treatment, hopefully.
Yep, absolutely. I think that's this is a possibly a great tool to move things back to some normalcy. Well, jumping into the debt ceiling, I guess I couldn't delay it anymore. I mean, this really is, I mean, it's almost like I don't know, I saw some headlines today about potentially, you know, there's kind of a civil war in the Democratic Party in Congress between progressives and moderates. And yesterday I heard, you know, some of the hearings with Janet Yellen that she was saying that, you know, maybe we should eliminate the debt ceiling. And my big question is raise the debt ceiling again, which is in effect always going to be this situation of kicking the can down the road, or eliminate the debt ceiling, which is kind of scary in my opinion, because you eliminate the debt ceiling and, it's kind of like this blank check to the federal government to continue to create money out of thin air. And then, of course, there is the big question of the immediate problem. What will happen by the time we get to October 18th? So there's kind of like all of these different factors at play. And, I know that there has been some talk about a December, I guess it's a December, kind of a stopgap that they've come up with between the House of Representatives and Senate. What are your thoughts on this continual? Because really my whole Wall Street career, we've had this kicking the can down the road with the debt ceiling. The debt ceiling and my Wall Street career have kind of been parallel to each other. I just remember every couple of years, the debt ceiling news cycle comes up again. Yeah. So what are your thoughts on it?
It does. And we saw what happened with it last time, where we did not default, but our debt got downgraded. And Mike, I think we spoke about this on the last time.
2011 it was, yep.
Right, but on our call 2 weeks ago, I think you and I called this correctly, that I had made the point that with the U.S. defaulting, it's not even just getting a downgrade, but as we discussed, global contracts are based in a lot of these securities. So yep. That's a big issue. That's when you're talking about global trade and really an impact to the global economy. I think they're always going to continue to kick it down the road. But Mike, I can't remember a time where, there's always going to be pork in some of these bills. There's always going to be divisions down the aisle. But the to your point, the civil war that's taking place in the Democratic Party right now is really what's concerning. And I wouldn't even say just the Democratic Party. I think you're seeing it in the GOP as well. We have these factions of progressives, and I don't even know if I'd call them conservatives. I think I'm not even quite sure what you'd call them, because their behavior isn't that of a conservative. But regardless, why the general middle of the road Republican and Democratic politicians, why they are pandering to these outliers is just very bizarre to me. And what's going to happen is, if this continues to go down that road, you're going to see a lot of turnover in 2022 and 2024. And it's really to the detriment of the constituents. They're supposed to be working for us, and doing it to make money for themselves or for their own political backdoor interests this isn't going to go away. How do you eliminate the debt ceiling? I'm clearly, Janet Yellen probably forgets in a day than what I've learned in my entire career. But I would imagine that would cause a pretty big issue with inflation. Can't just print money ad nauseum.
That's my point. To me, it just seems like insanity. But I just wanted to pick up on one thing that you just said. I think that what is seriously lacking in general is what we, it's kind of like it's like ethics, and it's also having like a conversation in a civil way. Like, you listen to the other party, and even if you don't agree with the other party, you listen to them, and then you say, okay, these are my points. This is what I'm looking for. This is what you're looking for. And let's come and meet in the middle. We clearly can't allow the United States to default on its debt. Like the entire financial system that we currently exist in is reliant on treasuries and the good faith and credit of the United States government. And, I remember back in 2011, and I went back and did my research, and there was the talk again about the printing or the minting of the $1 trillion coin, which is kind of like, I don't know if it's a gimmick, but it would actually work. But there's all kinds of things like these workarounds. It doesn't seem like we're having, kind of a civil discussion about the actual problems that come to solutions. And to me, that is really the underlying problem. It's not the individual outliers. You're always going to have outliers. It's about having a civil kind of conversation to resolve problems. There seems to be no problem solving or will to resolve things in a civil way, and that right. and not listening to each other.
And Mike, that is such a great point that you make. And I feel like a lot of what our conversations that we've been having, and typically, we stick to stocks, but even the conversations that I have on my show is that the social factor is always coming back into the conversation. When you are a politician, whether you're in the House or in the Senate, in the executive branch, judicial branch, legislative branch, there should be a certain amount of decorum and respect that goes along with the job. And when you see politicians fighting with each other on Twitter and calling each other names, I mean, like that, like what happened to decorum? And yes, I know, culture evolves and blah, 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 but you're in higher office. So I think that's part of the issue. Sadly, everything has been so politicized. And you would think that our leaders would try and not make everything so politicized and encourage unity. Like, I'm tired of, it's upsetting to me to talk about divisiveness all the time. Like, I don't want to live like that with so hopefully, I don't know what it's going to take to change, but I guess the immediate thing the market's focused on is the debt ceiling.
Yeah, well, I would say that, from my own, bringing us back to the debt ceiling, I mean, I think it's really the debt ceiling is the recycling of the debt ceiling issue kind of brings us back to reality. Sometimes that you just can't create money forever without causing inflation. In my 23 years of trading, I have never seen inflation become such a rapid problem. And it's not just a problem of inflation, but it's also what you correctly pointed out is that there are just massive supply chain problems, which are really I've never experienced in my 23 years as a trader and as a financial professional. I've never seen so many gaps in the supply chain. And I think a lot of it has to do with the fact that we went to just-in-time inventories and we got over-reliant on technology to a degree to get things to where they needed to be just in time. And then with the pandemic, it really kind of, it really created a number of very evident cracks in the system that if things only get there just in time, sometimes there's problems. And if you don't have an inventory and you don't have some chips sitting in a warehouse somewhere, it could create major problems in everything that we are used to doing. We've been so living in a period of abundance, we've kind of forgot what it's like to have scarcity. And that's kind of what we're experiencing now. And I think that the only way that we can really get out of it is to really take a step back, return to some principles, and listen to other people. Start listening would be a good piece of advice for everybody. But I don't think that we can limit the debt ceiling, and certainly I think that we're going to continue to hear about this because it looks to me like the solution to this current problem is that the Republicans are basically abstaining and leaving it to the Democrats to resolve this, and whether that's procedurally or otherwise. And of course, we're going to see this play out in 2022 in the midterm elections. But until then, we are kind of kicking the can down the road yet again. So that's kind of where I leave it. So I do think that we will get something passed by October 18th. What are your thoughts? Do you think we get something passed by October 18th and avoid a default?
I think we get somewhere where we don't default. Whether or not the packages look like either side wants it to look like is anyone's guess. But it really is a challenging time. And I why they keep, what's the right word, stymieing each other to get something passed is beyond me. Now, I can understand some of the reasons why, what is included in some of these packages really is key too. I think, for example, let's say with the infrastructure bill, if it was strictly for infrastructure, which I think everyone agrees that we need to upgrade everywhere. I go into the city twice a week. It doesn't matter what days they are. Never get back in New Jersey Transit on time. It doesn't matter. So everything needs to be fixed. So they stick to what packages are supposed to have included, which never is the case. They always try to put things in there, but I think when you get too progressive or conservative on one way or the other, we just can't move beyond that, and it's only a few outliers.
Yep. So I certainly hope that you and I are both right, and that we can get to something that at least solves the problem before this October 18th, because I believe that the financial system, the greater financial system, is far more important than any short-term bill or argument, because this unfortunately puts in threat the entire financial system, and not having, not being able to pay the good faith and credit, not paying the treasuries. That is a very, very big threat to the entire financial system. But on that note, it seems like we're going to watch and wait and see how this all plays out over the next couple of weeks. But I want to wish you a wonderful, wonderful weekend. It was great talking to you as always, Joe.
All right. Sounds good.
We have another competition starting soon too. So
I know, I'm excited. That's my favorite thing that we cover. I'd like to see what everybody trades.
Yep, it's absolutely going to be an interesting competition as well. It's an intermediate day trading competition. Let me jump to the charts. Have a great weekend, Joe.
All right, thanks. Take care, everyone.
All right, I'm just bringing up my DASTrader here. So here is our roller coaster. So we got to take a little look at the roller coaster here. This is the market has been a little bit of a roller coaster, as we can see. So if we were to go back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days, which is 2 weeks since our last session, what we saw is that the market pretty much fell off a cliff with a very, very big gap down. I believe that was on a Monday. But we had a pretty steep drop in the market after a pretty significant rally back up after that drop. And then we've had another secondary drop, which took us down to this key support level. Now, I'm going to just pop on my price by volume chart because it really does illustrate the support levels pretty well. So here, if you look, let's just go a little forward here. So this was the price by volume level that I pointed out 2 weeks ago, which said that we would get down to 434, which is exactly where price by volume indicates it would be. Now you go back a little bit, the next level down brings us right here. Wow, that's a long, long way off at 390. But I believe that the next support level that's really key for us to watch is this support level right here. This is 423. So if we do have any kind of, additional sell-off or breakdown, it would take us down to the 423 level. Below that brings us down to 415. And then the next level down in terms of S&P support is at 406. So we really have 1, 2, 3 levels of key support below this level. Now, the reason I'm focusing so much on key support is because right now we closed exactly at the price by volume level point of control. So we're right at our point of control. Now, there's two things that can happen. Obviously, we can certainly rally up, but notice that the moving averages have actually crossed over. And that doesn't mean that we can't rally back up. It just means that the likelihood of us rallying back up are less because now the trend is officially, we've entered into a downtrend. The 10-period moving average has crossed under the 20-period moving average. Now I'm going to pop up and load up another one of my pre-configured studies here on DASTrader. And I want to just take a look at the MACD here. So the MACD histogram has gone negative, and we're not even close to really crossing back to where it could turn positive. We're not even at a hook back to the upside. We have gone negative. We are negative on the histogram. We're pretty much trending down. Although I will say that on the CCI, we kind of have a little divergence where we've gotten oversold and have come back into the buy area. So that is a really strong CCI indicator that short term, we're probably going to rally a little bit. And I want to do this kind of analysis on some of the other majors. So the QQQ would represent the NASDAQ. NASDAQ really finally had a pretty big sell-off. And I want you to look at the NASDAQ is now under 1, 2, the two short-term, the short-term and the intermediate moving average, it's under its long-term moving average, but they're all three kind of coming into alignment here. Let's just take a look at all three moving averages. That's the 50 as well. So even the S&P is below all three of its major moving averages, okay? The DIA is the one that's showing the most strength because it's the most, it hasn't been up as much. And it is the most, like the DIA, if you look at the MACD here, like that potentially might turn back to the upside. The DIA is showing some signs of strength relative to the other indices. SPY not even turning yet. And the QQQ, we're really way off. But we'll see how it plays out. It is a little extended from its moving averages at the moment. Now, the one that's really interesting is the USL, right? Which is the oil, kind of the oil ETF. This is the 12-month oil ETF. I mean, it's breaking out. It looks like railroad tracks. I mean, this is the epitome of an uptrend. It could break out to a new high above 27. It's getting a little bit into the reversal zone on the relative strength indicator. And on the CCI, we've kind of had a little triple top being overbought, but very, very interesting to say the least. Let's take a look at gold, because gold yesterday, GLD, gold had a very, very, very big move off the lows yesterday. So we have a support level, key support level on gold. We kind of have a divergence on the CCI, with a little head and shoulder kind of pivot reversal here, and we have a turn to the upside on the MACD as well. So gold looking good. SLV, silver tends to do better. Silver outperforms gold in times like this. So in bullish times, silver outperforms gold, and in bearish times, it underperforms gold. So certainly keeping an eye on silver. I'd like to just take a look at this on the weekly. Silver is really at a very key level on the weekly. So this is a very, very key support level on the weekly. This is a long-term support level. Let's take a look at gold. I believe it too is on a long-term support level. Probably not as key as silver's level, but certainly looking okay. Let's take a look at GBTC. GBTC looking like a possible buy setup. A low pivot low and a higher pivot low on GBTC. So Bitcoin might be getting ready for a move back to the upside. That certainly would correlate with the move that already started with Ethereum. This is ETHE. This is the Grayscale Ethereum, Ethereum Trust. So certainly that one is looking like it's getting ready for a little bit of a bottom to be put in and possibly a move back to the upside. So keep an eye on Ethereum. Very, very interesting CCI as well on this. Let's take a look. Yeah, kind of might be a little bit short-term overbought, but interesting chart by the MACD standard as well. Let's take a look at Merck, MRK. So Merck, certainly had a big gap up today, gapping. I'm going to just zoom in a little bit because it kind of got, the chart got a little skewed. Merck gapped up from 75, 76 area all the way up to 81. So whatever your thoughts on the COVID pill, I will tell you that the market really liked the idea of it. And the truth is always in the price of the stock. So this, certainly this is the highest Merck has been in quite some time. I think the 52-week high was back here on August 2020. Basically, it came up and tested the 52-week high, pretty close to the 52-week high on Merck on this latest news about their COVID pill. On that note, let me jump back and give you a couple of updates. Let's jump right in. And it is always an exciting time. It is the #1 best trader competition. Registration for our fall intermediate trading competition is now open. and it runs through October. It starts and opens. It opens on October 3rd. Competition begins on October 4th. So you can sign up. Certainly by the start of the competition by October 4th. It runs for 20 trading days until October 29th. You can use the code DAS50 to save $50 off registration. So if you've watched today's event, you can save yourself $50 and sign up right away. You can go to onebesttrader.com for more information to sign up. The prizes are 9 months access to the DASTrader Pro platform, and the winner's name will be displayed on the NASDAQ market site, on the NASDAQ market site tower in Times Square. Always an exciting competition. This is a day trading competition and an intermediate day trading competition. So stay up to date, everything DAS, by signing up for our monthly newsletters. We just had a brand new newsletter, definitely worth reading. Simply fill out the form at the bottom of our webpage at www.DASTrader. Subscribe to our YouTube channel at DASTrader TV for market analysis and reminders. Follow us on all social media at DASTrader. That's LinkedIn, Twitter, Facebook, and Instagram. I want to wish everybody a happy, safe, and healthy weekend. Till next time, see you in 2 weeks. Bye-bye, everybody.